our best investments have been where we've been introduced directly to a family that owns a business, and we've built a relationship with them over a long period of time, and we work out fair terms that really help our investment. But also, I mean, a lot of the sellers, they really care about these businesses and their employees and their community, and they want a buyer that's going to do the right thing by them. So, but again, it's a win-win for both sides.
Hi there, and welcome to another episode of The People of Private Capital. I'm Ferdinand Roberts, the CEO and founder of Asset Class. We deliver solutions to the private equity, venture capital, and broader private capital markets. So if you're looking for solutions for fundraising, managing your investor relations team, or managing your deal flow or portfolio management, we'd love to talk. In this episode, I'll be talking with Sequoya Borgman. Sequoya is the CEO and founder of Borgman Capital, a private equity company focused on the lower middle market, leveraged buyouts, and commercial real estate based in Milwaukee. And in this conversation, Sequoya shares with us what it was like growing up in the mid-70s to a single-parent family, the work ethic that was engendered by virtue of his focus on working a second shift in an industrial plant to pay his way through college. He then spent 20-odd years working for some of the world's largest accounting firms before founding Borgman Capital. As I mentioned, Borgman is focused on leveraged buyouts and commercial real estate. We delve into a little bit more about the types of companies that Borgman invest in, some of the successes, some of the recent investments that have been made, and some of the lessons learned from failures. It's a great conversation, and Sequoya was very gracious in being very open about the background of the company and indeed their ambitions for the future. So with that, please join me in this conversation with Sequoya Borgman from Borgman Capital here on The People of Private Capital. Great. Well, Sequoya, you have a tremendous amount going on there as evidenced in the introduction, but I'm delighted to finally get the chance to sit down with you and learn certainly a bit more about the company, a bit more about you as an individual. You're a valued client of ours. I should just make that disclaimer up front, but we're very happy to have you on the podcast.
I'm excited to be here as well. Thanks for having me, and we're very, very happy customer as well.
Well, that's good to hear. Good to hear. Well, I'm certainly conscious of all of the activity that's going on at Borgman right now. I know we're going to dive into that over the course of this discussion. But as is customary on the podcast, to give people a little bit of an appreciation for who is Sequoya, what's your background, what got you here. I had the opportunity as part of my research just to try and understand a little bit more about your background, growing up in Northern California, growing up, and I'm assuming getting your work ethic from, growing up as part of a single parent family, having to work that second shift, et cetera. I'd love to hear about all of that if you're comfortable to talk about that, and then perhaps we can dive into a little bit more detail. But just a little bit of background would be much appreciated.
Yeah, no, happy to share. I grew up, as you said, probably as far away from private equity as you can get. So I'm very, very fortunate to end up where I'm here today. But like you said, I born, raised by a single mother. She was a teenager, high school dropout, and really had to work a lot of jobs to put me and my sister through primary school, elementary school, and that's where I learned my work ethic. I mean, there's nothing that we do that's as hard to do as raising two kids as a single mother, especially back in those days, and it puts things in perspective. So I had to work as soon as I was old enough to work. I worked second shift after school and worked in factories and worked assembly lines with adults and was fortunate enough to put myself through high school and college by working. And then I got into, again, I had no clue what private equity was, but I got into accounting in college. I graduated with my master's degree in accounting and started with one of the large international accounting firms and worked in with those big firms for almost 20 years. And that's where I got introduced to M&A and private equity and structuring transactions and really learn the trade from that side of the business. And so after doing that for about 20 years, I decided to leave and launch the firm. We launched in 2017 and we've been off to the races ever since.
Yeah. Yeah, it certainly struck me when I looked at your background. It kind of reads like a who's who of the big four, big five, whatever you want to refer to them as. But Grant Thornton, KPMG, Deloitte, RSM in the US. It's certainly a really significant and I'm sure very valuable grounding for what you're doing right now. So having the ability to crunch the numbers, look at a set of books, understand where, in some cases, where the skeletons are, but also where the opportunity lies. Would you say that's the case, given your background?
Yeah, it's perfect timing for me. As the private equity industry grew, those big firms really focused on that. Some of those firms, a third or more of their revenue is from private equity transactions or private equity portfolio companies. So it was great training and public accounting. I always say that accounting is a language of business. You can't really understand a business without understanding debits and credits and how to read a balance sheet and income statement, cash flow statement. If you know how to do that, you can really judge the health of a business in a very short period of time.
Yeah. It's interesting when we look at this. I guess we'll do now. Just take a look at your focus, your area of focus. How would you best describe your focus as a PE firm, first of all?
Yeah, ultimately, we're value investors, really focused on the lower end of the middle market, so companies under 100 million of revenue. But our focus are nice, established, cash-flowing businesses, family businesses, entrepreneur-led businesses that have been around a long time, have a great business model. We don't look at turnarounds or restructuring opportunities. We're really looking at nice niche industries and nice businesses that are looking for some type of succession plan, and that's where we step in.
Yeah. And is that typically when you're looking to get involved, you're looking for kind of long-term operational, effectively buy and hold kind of strategy with and operate with these companies?
Yeah, exactly. A lot of the companies we've bought have been 70. We've bought companies that have been over 100 years old, third generation family businesses that are just looking for a succession plan. And we're a traditional leverage buyout, so we buy these businesses with some leverage and then we put some equity in and we're kind of continue the nice business and hold for long term.
Yeah. And when I look at the profile of businesses that you got portfolio, let's say the companies you're currently engaged with, as well as some of the exits that you have, which I'd love to talk about, it strikes me just now understanding a little bit more about your background that certainly you understand the value of a dollar, right? Because I think you cannot grow up in that type of environment, as a kid, as a young adult, and somebody who's got to raise, the money required to get yourself to college and everything that entails, and work in an environment like that with an appreciation for the value of a dollar, but also, how hard people work in the profile of businesses in which you're investing. Would you say that's accurate?
Yeah, that's very accurate. The cash flow in these businesses are really the lifeblood of the business. So you really have to focus on the bottom line and make sure that the businesses are generating the cash flow needed to support the employees, their livelihood, and really reinvest in the business.
So let's talk about some of the companies that you're investing in and perhaps the profile of them. I can see there's food companies, there's pet treat companies, there's a pretty wide variety. Maybe talk about some of the companies that you've had success with, you've exited, you've invested in, operated and ultimately exited. What companies stick out in your mind as let's say poster children for what it is that you are endeavoring to do?
Yeah, if you look at our portfolio, it does look eclectic, but if you looked at their financials and kind of cash flow, they would all look very similar. Like I said, our box is really just nice established cash flowing businesses that aren't very cyclical. They may be in different industries, different segments, different end markets, but from the balance sheet and income statement standpoint, they look very similar. Since we launched in 2017, we're in our 7th year. We really started exiting businesses last year. We sold 2. One was a material handling roll-up where we bought 3 material handling businesses, and we sold that to a larger private equity group that had already had a platform in the space. That was a really nice transaction. We held that business for a little over 5 years. And then we also sold an equipment rental business that we had bought. Again, it was a founder had started the business 40 years ago and was looking for a retirement option and sold the business to us. We brought in a really great management team and leader for that business, and it just grew way more than we could have ever expected. So we exited that to a large public company late last year. And that was a 3-year hold period for that business.
Right. Very good. That was the Herc exit. Yeah. Looks, incredible. I'm interested to understand what comes first for you when you think about your investment strategy. Are you looking at trends that you believe you have the opportunity to kind of take advantage of? So you're in other words, taking an investment strategy and looking through that aperture to find companies that fit that, or are you looking at companies and judging them on their merits and determining whether or not that fits with your criteria?
Although, truthfully, we have both. We have investment theses where we go after certain industries and look for opportunities in those industries. But there's a lot of groups doing the exact same thing. So those industries with great investment opportunities are fairly competitive. So we do that, but we also are opportunistic. Our best investments have been where we've been introduced directly to a family that owns a business, and we build a relationship with them over a long period of time, and we work out fair terms that really help our investment. But also, a lot of the sellers, they really care about these businesses and their employees and their community, and they want a buyer that's going to do the right thing by them. Yep. So, but again, it's a win-win for both sides.
Yeah. One of the things that struck me, we had the opportunity to come down and meet with your team in Milwaukee, and you can probably tell from my brogue I'm Irish, and we like to think of ourselves as a friendly group of people. I think Milwaukee is very similar, but also it's a small community, as in it seems very well networked, but also people are pretty open about the challenges that they have, challenges you're seeking to address. And I heard you talk in a podcast recently about that 1 degree of separation. To what extent does the success of the firm rely on that network? First of all, in terms of deal flow and things of that nature. That's kind of my first question. The second one is tangential to that, but it is related to the earlier comment, as in how much of your history do people appreciate? Because people buy from people, right? So if you are looking to make an offer, I'm assuming that the people who've spent, in many cases, their whole lives building businesses want to know that it's going to somebody who's going to help steward that business and maybe take it to the next level and look after it and look after their employees. To what extent is your background and I guess your upbringing play into that conversation?
Yeah, well, I'll address the first question. I'd say the network and being headquartered here in the Midwest, that's been a huge factor in our early success. Finding off-market proprietary deals through personal introductions have really been tremendous for us. And we have an office here in Milwaukee, and we launched an office in Minneapolis. I'd love to launch offices throughout the country in these secondary markets where you can still find direct proprietary deals through personal connections, and you can't do that without sitting in those those markets. I'm never going to get a personal introduction in St. Louis or Kansas City or a market that I'm not sitting in. But here in Milwaukee, we see most of the opportunities that come to market, or most of the business owners that want to sell, that are within our kind of sweet spot. So it's been a huge factor in our success.
Yeah, yeah. Well, you certainly got a great team there. It was an absolute delight to be able to spend time with them, and as I say, proud to be a partner with you guys. Just kind of looking at more recently, I do follow you on LinkedIn. I follow the Borgman Capital on LinkedIn. You guys have been very active. I saw some recent acquisition closes. Can you talk about some of the companies that you've invested in recently?
Yeah, happy to. The deal flow has definitely picked up this year. Last year was a slower throughout the industry, but
Yep.
especially for us, we looked at probably as many deals, but there was very few that were quality deals or actually closed. But that's picked up. Earlier this year we closed on a chemical distributor in Cleveland that we're very, very happy to acquire. The owner again had worked at the business 35 years, acquired it, and was looking for kind of his transition plan, and really, really a nice fit for us. And we closed on that in February, and then we got into the pet treat space here a month or so ago. We closed on a really nice pet company. We're really backing the founders and owners on that transaction. That one's located in Montana.
Yeah. And I'm just interested, particularly when I heard about, so that's Buckbone Organics, right? When I looked at that, and perhaps you've answered it earlier, when you look at the books, it's maybe it's a similar story to other investments that you've made. But I also wondered, to what extent, some of the social changes that are happening, a lot more people working from home. I know that the number of pets in the U.S. market, has been seen significant growth over kind of COVID and post-COVID, as people are spending more time at home. To what extent are these kind of macro level changes kind of playing into decisions like that, or is it more, let's coldly look at the books here, let's understand what this business is doing? Is it, does it fit with our criteria?
Yeah, I mean, it's of course you can't not be aware of the positive trends in the pet industry with everybody adopting pets during COVID, and that, I mean, those pets live for 10 or 20 years, so that trend is going to be here for the longer term. And us and quite a few other private equity firms really started investing in that space. Even prior to COVID, the space was pretty hot. So we've probably looked at 24 deals before we found this one. That again, we went out to Bozeman, met with the owner, the founder of the business, husband and wife team, and we just really hit it off. I mean, they are great people, first of all, and they've got really nice business, and that was really why we were excited to partner with them on the kind of next phase of that ownership of that business.
Yeah, that's great. And that relationship is clearly very important, right? If it's going to work, I'm interested to understand clearly with succession that makes sense, or people maybe wanting to take money off the table. I mean, what are the scenarios under which it kind of makes sense for people to look at a company like Borgman?
Succession is number one. If somebody wants to either take some chips off the table or retire and wants to work with someone on a succession plan. But the Buckbone one, that was really, they wanted some growth equity to help them kind of get to the next level. They were having growing pains. I mean, that takes a lot of working capital when you're growing as fast as they were, and that was a great opportunity. The other opportunity that we like is just management buyouts, where the management team has been running a really good company, and they just can't afford to buy it themselves, and they need some backing. That's really a great opportunity for us. Corporate carve-outs, we're working on one of those right now. Those are nice opportunities, but really anywhere where there's a nice, steady, profitable business that's looking for new ownership, that's a great fit for us.
Yeah. And I guess there's a separate, or I guess related insofar as it's a private capital opportunity, but the real estate arm of your business. Can you talk a little bit about that? Just give a sense of where you're focused and the kind of markets that you're focused on in the CRE space.
Yeah, that's kind of grew out of our private equity investments and was more opportunistic. So as we look at buying businesses, a lot of times the owners own the real estate and they want to sell the real estate as well, or the real estate is part of the transaction. So early on, we would flip those to sale leaseback groups or somebody else. But our LPs, our investors, started asking for access to those investment opportunities. So 3 or 4 years ago, we started hiring a few people to really focus on that side of the business, and they've been very successful on doing industrial, triple net lease, stabilized, long-term lease investments, and yeah, they did their largest deal yet late last year, and that has really taken off. And again, I mean, when you're looking at those types of assets, you're really looking at the credit of the tenant, which is no different than what we're looking at when we're buying a business. So just given our resources and what we have, we're uniquely qualified to look at those underlying risks when we're looking at real estate investment.
Yeah. And are there any particular, let's say, sub-asset classes within that space that excite you in terms of trends right now?
We love industrial. And again, we're not doing specs. We're not doing development stuff. Although we bought a campus for a very nice company that was wanted to do an expansion last fall, but they signed a long-term lease, and it's a great company, great credit. So we're happy to do those types of investments.
Yeah, perfect. Well, that's great. Well, so that's a little bit certainly about your background, the current focus of the business. You made mention of the fact that you'd love to have Borgman offices around the country. Can you talk a little bit about the future plans of the business and maybe aspirationally where Borgman is headed next?
Yeah, like I said, our best opportunities are providing really great lower middle market investments to our LP investors, and the best opportunities are found through our network. And we'd love to continue to grow the firm, bring on more kind of deal origination individuals in other markets. We also continue to professionalize the value creation side of our business. We're looking to add some people on that side, people that are more focused on portfolio management and creating value, because at the end of the day, that's what moves the needle, and that's how we'll continue to be successful.
Yeah. And I'm interested when, for example, when you make an investment, or perhaps it's an LBO, and you're taking effectively control of the business, maybe bringing in a new management team, et cetera. Well, first of all, how do you go about doing that? Do you have people internally that are focused on that kind of recruitment process, that are out there establishing and developing those networks of people that may fit with either future investments that you make, or I'm interested to understand how you think about that, because that's a real challenge, right? It's almost the number one risk in a transaction where you're buying from a family or a founder that's very integral to the business, is that transition to the next leader. So we spent a lot of time on that, and we have a very large bench of, whether you call them operating partners or operations leaders that run other companies, that we know. I meet with them several times a week, these types of individuals, to run these companies. We usually work with the founder or the owner on making sure that the cultural fit is there, that we're not totally changing the culture of the company by bringing in a new leader as well, because that is key. Anytime a company that's been in one family for 50, 60, 70 years goes through a transaction, all of the employees there are very, very concerned about their jobs and their health and welfare, and we really don't want to bring in somebody that's going to destroy the culture that's been built over a long period of time. Yeah. Well, one of the things that I share of a 20, well, almost 21-year-old son. He's actually works in the business now, and I talk about the failures that I've had and what I've learned from those failures, which arguably is a lot more than I've ever learned from any success that I've had. And I wonder, when you look back, we don't need to talk about specific companies, but not every investment is going to be a breakout, right? Success. If you look back at any investments that you've made that perhaps haven't gone as expected, what type of lessons do you learn from that? What have you learned from it? And do you have any examples of benefit of hindsight, we would have done something differently?
Well, we've been
That's a
investing.
tough question.
We've been investing through the COVID period, so there's a lot of lessons learned. But
Right.
I think you already really touched on the biggest lessons, the ones where the investments have stumbled or we've had that J curve, is we just had the wrong leader in
Yeah.
place, and unfortunately, we've made that mistake multiple times. As much time as we spend on it, I mentioned that material handling business that we sold last year, which was a tremendous success for us. But we went through 5 leaders through that whole period.
Right.
And then when we found the right leader, that's when the company really took off and did really, really well. So it's all about people. It's all about the culture and having the right person leading the company.
Yeah. And speaking of leaders of the company, I mean, obviously you're leading your own company in addition to making investments in others. Anything you share about the challenges? I mean, I've worked in private equity, and I've worked for what was a family office that ultimately became a PE company, and patriarch of that business was constantly left, right, and center, was running, had always had 100 things on the go. Very challenging to manage that. Any words of wisdom that you'd share, just based on your own experience of or maybe things that you don't handle so well that you'd like to be able to handle a little bit better?
Well, again, it's all about people. So if there was, and we get the most interesting, the most difficult people challenges that bubble up from the portfolio companies and the firm as well. I feel like we're all aligned and all very ambitious, high integrity individuals. So that's less of an issue. But coming from the portfolio companies, we're always having to handle people issues. So my dream would be at some point would be like one of the larger firms that have a whole HR group really focused on addressing those types of. But right now we deal with them as they come.
Yeah. Well, I had the benefit of growing a number of prior companies, but last software company that I grew and sold after a good number of years. I promised myself, and this is no reflection on the people who worked with me or alongside me, but I said to myself, I'm going to look for an opportunity where I don't have to deal with people as much, because it was the biggest challenge. But of course, here I am, another, almost 5 years into this venture. You can't build a company without people. I mean, that's ultimately the reality of things. But it is, and always has been, at least in my experience, the biggest challenge of growing any business that's worthwhile, at least. But speaking of kind of growing the business, we had the opportunity to talk about a new initiative that you have at Borgman, which is the Pass the Hat initiative. Can you talk a little bit about that and what the principle is behind it, the thesis behind that initiative?
Yeah, thanks for asking. We just launched a new retail investor platform for kind of high net worth individuals, family offices, smaller institutional investors that want direct access to private equity and private real estate investments. The website is passthehat.com. It's named Pass the Hat because an investment banker friend of mine, probably 10 years ago, had mentioned passing the hat around to get deals done, and it's always stuck in the back of my head. And So, and our LP base has grown over the years as well. We have almost 400 LPs, and handling that many LPs without a platform like this has been difficult. Prior to us partnering with you, thanks to your asset class, has really simplified that process. And now on top of asset class, we have this this retail investor platform, Pass the Hat, that we're really excited to launch that, and should really simplify not only our process, but also, like I said, there's a lot of people that if they're not in the industry, they don't know how to get access to these type of really nice lower middle market private equity and private real estate investments. So that's why we've launched this new initiative.
Yeah. I mean, I think it's great. It's certainly something that, I guess the concept of democratizing private capital opportunities and as you say, giving people access to these. I mean, very often the most attractive private capital investments just are outside of the reach of people, or for lots of reasons, including regulatory and compliance reasons, it's difficult to actually uncover these opportunities for people who have the opportunity to invest. Just by way of example, what types of investment opportunities are you looking to feature through the Pass the Hat initiative?
We're going to open most of our acquisitions up to new retail investors with low minimums, and really give them access to the stuff that we're investing in. And I know there's other platforms out there, but most of the other platforms are aggregators. We are only going to put our own vetted investments on the platform, and I'm personally investing in each one of these companies. But we're giving access not only to simplify the process for our current LPs, but give access to new LPs that really aren't aware or don't have access to these types of direct private equity investments.
Yeah, and so that will span both the traditional LBO type investments as well as the real estate.
Yeah, I mean, there may be some smaller transactions that aren't open to new investors, so we don't always allow new investors, but the larger transactions and the real estate will be open to new investors.
Yeah. I mean, I think it's an incredibly important initiative because, as I mentioned, the access to private capital opportunities is part of the issue, and the opaqueness that exists around private capital, I think, is a real challenge on both sides, for both the investor trying to find the opportunities and for companies like Borgman looking to engage potential LPs. But I guess that at a much broader level, and arguably more importantly, the returns from public markets versus private markets, over time, over the last 20 years, that gap has widened, right? The private market returns have vastly outstripped the public markets, and not having access to that as a high net worth individual or a family office or accredited investor, which I guess everybody who's investing here needs to be accredited. That has been a challenge, and I really like the initiative. And of course, we're delighted to be able to help with it.
No, we appreciate all your help. I know I'm biased because most of my net worth is invested in these private investments, but and we see, I'm sure you do as well, plenty of opportunities to invest in private equity. I see a lot of just because of my network, but there's very successful families, there's very successful business owners, there's very successful CEOs that just don't see those opportunities because they're not as tied into the industry and into the network as we are. And the great thing about your platform, asset classes, is we can do all the accredited investor checks through the platform, and it takes a lot of that heavy lifting off of our plate.
Yeah, no, it's great. It's great to be able to work with you on it. And yeah, looking forward to that. So is that formally available now? People can go to passthehat.com and take a look at that?
Yeah, we launched it. We have an investment opportunity. Our newest investment opportunity is on there right now, and we hope to provide more throughout the year.
Yeah, perfect. Well, just to kind of round out and maybe zoom back a little bit, Sequoia. I mean, we're as a company at Asset Class, we're exposed to what's happening in the private capital sector across the U.S., Europe, and actually more recently, we're just about to welcome our first Asia Pacific client, which is exciting for us. It has been a tough, probably 18 months to 2 years almost in the sector. I know there are certain sectors that have performed really well. Credit and debt funds have been very fortunate. But yeah, deal flow has been challenging, and it is definitely starting to pick up. We certainly saw the early signs of it probably 6 months ago, if not a little bit before the back end of Q4. A really significant uptick in people engaging with us to work on their platforms, which in turn has led to, a higher incidence of deals closing and more fundraising. How do you feel about the market now? And if we look at for over the next 12 to 18 months, any indications for you as to how the market is moving? Do you feel like it's hit bottom and it's coming back, or there are obviously lots of kind of macro level influences on that, interest rates, inflation, et cetera? What are your thoughts on that?
Yeah, I think there's a built up demand. There's a lot of sellers out there sitting on assets that they would love to sell. I actually was reading the ACG's GF data report came out this morning, and first quarter multiples have come down significantly for the first time. So I think that the seller expectations and buyer expectations are more aligned, which will get more deals over the finish line. I was talking to a large LP yesterday, and in their portfolio of 40 to 60 investments, only about a third that they took to market last year actually closed. And we saw similar numbers. So I think with expectations more aligned, a lot more of those transactions will close this year, and there'll be a lot of momentum going into next year.
Yeah. And any concerns about the market conditions right now? Any things that are potentially concerning to you guys from a macro level perspective? I know there's a lot of heat and focus on what's been happening in the office space. That sub asset class, right? In terms of occupancy rates and the impact of working from home and things of that nature. Any concerns like that?
Yeah, there's clearly sectors that are struggling due to the rise in interest rates. You spoke about the office space. There's a lot of classes of real estate that are having troubles right now, and industries. I mean, across our portfolio, all our consumer facing businesses are performing very, very well, but like our telecom business is having struggles right now because their customers, the big cellular businesses, are highly leveraged and paying a lot more for their cost of capital. So it's really where's your in customer. And I know working capital, people are really focused on working capital right now just because that cost of capital, it's doubled or tripled in the last 18 months.
Yeah. Well, despite all of these challenges or any headwinds that are out there, you guys seem to be continuing to press on and investing in some really interesting companies. Got some stellar new initiatives that doesn't seem to be impacting your ambitions for growth, which is great to see. Just in closing, Sequoia, and thanks very much for taking the time to talk to us today. If people want to reach out and learn a little bit more about Borgman Capital, or indeed Pass the Hat, or connect with you directly, what's the best way for them to do that?
They could reach out through our website, borgmancapital.com, or if they're interested in investing in private equity, they can reach out through passthehat.com. Either one.
Yeah. Okay. Great. Well, we'll put the links to both of those, and indeed your LinkedIn profile. We'll put that in the show notes so people can connect with you, learn a little bit more about what you guys are doing. But for today, Sequoia, really appreciate you taking the time. Continued success. Again, thank you for putting your faith in us as a company to help you as you continue to grow your business, and wish you all the best for the future.
Well, thanks for having me.
All right. Thanks very much, Sequoia.
All right. Thank you.